But this is kind of isolated with the private developers, and we could see other private developers go down the same track or the same road. But what's key when it comes to China is the state-owned developers are really undertaking those projects, delivering those projects as well to citizens in China.
Is it really priced in? Evergrande's share price plunged by more than 20% yesterday after the court order and before trading was suspended. Of course, it had already slumped, and clearly overseas creditors are going to have to cop some losses. It does not look good.
It's been something that investors have been closely monitoring, so it shouldn't come as a surprise. In terms of the overarching property sector, though, and I referred back to the state-owned enterprises, I mean, even though we saw sales across the country down last year, some of these state-owned enterprises were actually delivering a pickup in terms of sales. So we can't forget that China is a very big country. It's got a number of provinces. We tier our city in China, so different tiered cities are all performing differently. And it's really about restoring confidence in the property market, even though you will get periods where you could see some further news flow regarding a number of private developers when it comes to the property market.
Will international lenders be put off financing further foreign investment in China, something President Xi is very keen on?
In terms of foreign investors into China, both from a capital markets perspective as well as broad business, we have had a year and a half of negative sentiment. The sentiment certainly hasn't shifted to being more positive or optimistic. But in terms of the actual opportunities, I think this is where we need to separate a lot of the macro negative news flow versus what's actually going on the ground there. And there are still a number of opportunities, whether it's relating to the Chinese consumer, whether it's relating to other Chinese sectors, industrials, materials.
There is a huge employment problem. The government won't even talk about youth unemployment and where that's at. The stock market is tanking. Is the way to boost confidence and consumer consumption an economic bailout? And is it something China's government will consider?
I think, again, when it comes to China, we have to reset expectations. The old days, like back in 2008, I should say, when the Chinese government just threw so much stimulus into the system and provide a lot of liquidity, those days aren't what we're seeing today. And we don't need to see that because GDP growth and the quality of growth has shifted dramatically from what it used to be. So whether it's the labour market and the health of the labour market, whether it's, other aspects such as resuming sentiment, positive sentiment that is in the property market, it's all something we need to gauge, but the government is doing adequate tweaks to try and prop up growth.
Why do you believe the international headlines that Evergrande will trigger a much more widespread economic rout are being over-egged?
Well, I think for the past 2 years, we've seen a lot of headline news flow really drive sentiment and as such flows into the Chinese market. The news flow seems almost at times a bit relentless. But what's key is that when you look at multiples, and I want to make this all about Chinese stocks are cheap, but if you look at where current valuations are across the board, across all these sectors, you're finding a lot of opportunities because we do think earnings will pick up, albeit from a very low base. And the growth, whether it's domestic growth or even Chinese companies tapping into international customers and market share there, really does still look very attractive.
Do you see that there will be implications for Australia's economy as a result of China's reliance on Aussie iron ore?
Well, Australia is very fortunate in terms of the quality and the cost of materials and getting those resources out of the ground. Just because we're seeing a slowdown in the property market and construction doesn't mean that Australian companies stand not to benefit. Again, that quality of the products and the services, whether it's materials or education, really is key for Chinese consumers or customers. And so Australia is still pretty well placed given its geographical distance to China.
Catherine Yeung, great to speak to you.
Thanks so much.